Good morning, everyone, and welcome to the live session of Bob World Hackathon on account aggregation in wealth management services. My name is Preeti Arora, and I head the investment and insurance wealth strategist division at Bank of Baroda. In this session today, I shall aim to cover the basics about account aggregation, its process flow, and its importance and relevance in wealth management. I'll just share the slide with you. Yeah. So, as you are aware, India unveiled the account aggregator network, which is a RBI regulated entity, in early September 2021, marking the first step towards bringing open banking in India. So what really is an account aggregator? Account aggregator is basically a financial data sharing system that aims to revolutionize investing and credit. It thus helps consumers have greater access and control over their financial records by empowering them with control over their personal financial data, which traditionally has remained in silos. So through the account aggregator network, customers can digitally access and share their financial data across institutions in a secure and efficient manner. As long as the financial institutions that an individual is dealing with are regulated and a part of the account aggregator network, an individual can securely and digitally access and share their information from one financial institution that they would have an account with to any other regulated financial institution within the account aggregator network. So once fully functional, all aspects of a user's financial data, their investments, their insurance policies, loans, bank details, etc., would be easy to access at a glance. So while this makes it convenient for the consumer, it also helps in expanding the potential pool of customers, of lenders, and fintech companies. So the key players to this entire ecosystem would be the financial information providers, which is the FIPs, and the financial information users, or the FIUs. And of course, in the center of it all would be the account aggregators themselves. So account aggregator network features financial institutions such as the banks, non-banking financial corporations, non-banking account aggregators, and third-party service amongst others. Banks act as a financial data provider, while lenders act as financial data seekers, while the non-banking account aggregators act as mediums of communication between banks and lenders. So each participant of the account aggregator network enables easy and secure exchange of data for the client's benefit. So this this is just a pictorial depiction of what constitutes the FIPs and the FIUs and how the account aggregator can be central to both of them. So FIPs would basically consist of banks, the mutual fund distributors, the equity depositories that are NSDL, CDSL, the insurance companies, pension fund repositories, GST, and other tax platforms. On the other side, the FIUs will again be banks again, because bank to bank, the banks again, then non-banking financial corporates, wealth managers, robo-advisors, fintechs, and other financial regulated entities. So moving on, we'll just quickly cover the process flow in account aggregation. First, an individual or business opens an account with an account aggregator. Then they create a funnel for their financial data by linking their bank accounts, insurance policies, and other accounts essentially containing the customer's financial data. Second, the customer can provide consent to a lender to access their financial data through the account aggregator. This usually happens when the customer is looking for a financial product that requires their financial information to be collated. Third, after consent is provided, so it's important to note that this is only on consent of the customer. So post consent is provided, the account aggregator seeks permission from the financial data providers to access the customer's data. And finally, the data is sent to the account aggregator, which in turn empowers lenders to better evaluate the customer's financial profile and risk associated with providing the underlying instrument. So it is important to note that in the entire process, the account aggregators cannot see the data. They are just mediators. They cannot see it. They cannot save the data. They're just mediators who take data from one financial institution to another based on an individual's direction and consent. So contrary to the name, they actually cannot aggregate the customer's data. Account aggregators, like technology companies, are not one that can aggregate data and create detailed profiles of the customers. So the data account aggregators share is encrypted by the sender and can be decrypted only by the recipient. The end-to-end encryption and use of technology like the digital signature makes the process much more secure than sharing paper documents, which has traditionally been the case. A few points which are noteworthy here in the entire process is that the account aggregator cannot share data without the consent of the individual. Secondly, account aggregators cannot read customer data. Neither can they resell customer data. They cannot save it. They cannot resell it. Thirdly, account aggregators enable customers to selectively share and even revoke data once shared. So even if a customer has shared their data, they have all rights to revoke it at any point in time. And fourthly, an account aggregator have a fiduciary duty to customers and are RBI regulated entities, sharing digitally signed and encrypted data only. So currently, if I see it from a case of pertaining specifically to wealth management, currently the wealth managers in India are largely dependent on their clients to submit data on a periodic basis. There is no pool where they can actually fetch this data from. There has been digitalization. There are certain means where you can gather some information, but not all information is can be gathered under one roof. So the client has a choice to share credentials with the fund managers currently, by which sharing of data is if they share their credentials, obviously sharing of data is no longer a problem for the client. But essentially, this is not the right way to be sharing data or to be fetching data from fetching data as well. So digitalization of investment account is prevalent and largely the preferred means even now. There has been a lot of digitalization across the financial industry, across the wealth management industry. But some details like the annual income, occupation, nominee details have to be entered manually. So that still needs to go. We still need validation with that, and that still needs to be done manually. So also documents like Aadhaar card or PAN card have to be uploaded. This can be omitted with the help of an account aggregator, as these details can be fetched from the FIU directly. So there can be a lot of streamlining and a lot of ease of process with this. These are basically broadly the wealth management products that are available in the market. Mutual funds, obviously, as we all know about mutual funds, this is a pool of funds which is managed by a wealth manager. This obviously mutual fund would also be quite easy to access for all retail investors. Portfolio management services, again, these are managed by the portfolio, by the fund manager, portfolio manager. These can be both discretionary and non-discretionary, which would say that whether the investor has the right to have any say in the way they have been operating or when to buy and sell. Although even if it is discretionary at the hands of the investors, the trading has to be done by the fund manager. Alternate investment funds, again, these are also specifically managed by the fund managers, and these again are available to retail investors as well as high net worth clients. There are structured products, there are bonds. Bonds, again, are units of corporate debt issued by companies and securitized as tradable assets. A bond is referred to as a fixed income instrument, since bonds traditionally paid fixed interest rate, that is a coupon, to debt holders. Other common forms of bonds are variable or floating interest rate bonds. And lastly, we have the insurance, which is a means of protection from financial loss, in which in exchange of a fee, obviously, a party agrees to guarantee another party compensation in the event of a certain loss, damage, or injury. Um, so this basically tells us about the sharing practices in the mutual fund and broking industry currently. Um, uh, if the account aggregator system can make the wealth management a lot faster and cheaper once it is implemented in its full vogue. It replaces the the long terms and conditions form of acceptance with a much granular step-by-step permission and control for each use of investors' data. India's financial system currently involves many hassles for consumers today, like sharing physical signed and scanned copies of bank statements, physically having to notarize or stamp documents, or having to share a personal username and password to give financial history to a third party. Um, the account aggregator would replace all of these with a very simple mobile-based, safe and digital data access and sharing process. This will obviously create opportunities for new kinds of services, even in the wealth management space. So this basically with account aggregator, a client can give a recurring consent to an account aggregator to share data from select FIPs with the wealth manager. This method has advantages like, firstly, the data principal doesn't have to share the FIP's credentials, that is login credentials and passwords. So this traditionally has been the case wherein there have been sharing of credentials involved, but then with the account aggregator stepping in, we wouldn't have to see something like that happening. Secondly, the wealth manager is not dependent on their client to share data, because obviously currently if any instrument has to go through, the wealth management industry would be largely dependent on the client to come back with the details, or be dependent on them to or to even fetch details from them. So that the dependency will go off once we have consent from the client to take data from other FIPs. Secondly, the wealth manager is not depend. And the data received by the wealth manager is in a digital format. So this can be fed directly to the wealth manager's platform. It can be largely error-free because manually, obviously, when we are entering manually, it is prone to errors. There could be missing details, or there could be errors in inputting data. So this platform will largely be error-free and can also generate the reports can also be generated with ease. Currently the scenario in the wealth management industry is that investments of most retail investors are scattered all over the place. So there could be different mutual fund distributors, banks to brokers, and insurance companies. So one particular investor could have would obviously have instruments from all institutions, and hence the data is scattered everywhere. So most investors struggle to get a single view of their investments under one platform. While we have NSDL cash statements, especially for the investments piece, but then even then there is a need to be able to see everything under one roof, and so that the client gets a 360-degree view of their portfolio. And even because there has been instances when the client would might not recollect as to where they have invested or what their exact portfolio value would be at any single point of time. So they struggle to get that single view of their investments under one platform or through one distributor. So this is a very incumbent platform that this will allow it does not allow them to do so, and unfortunately they don't have choice but to get users to fill in their data manually with a highly cumbersome process. Where every time there is a new investment, there has to be, the entire process has to be taken care of. The forms have to be filled, the data has to be filled in. And then obviously this would be repetitive even for the investor, and this could be prone to a lot of errors, both in inputting and also while giving information. So the other way around, this is to scrape mutual funds. Like I said, we can get NSDL statements, which again are not exhaustive. There could be some which are missing or some which have not been uploaded, and would then in turn not be totally accurate. So the account aggregator ecosystem eases all these concerns by allowing traditional and online advisors alike to let their users access all investments in one platform. Additionally, advisors can process the data and derive actionable insights from investors' portfolios with their consent again. So consent of the investors is extremely important while we aim to derive the information. This entire process will not only enable investors to monitor their holdings in real time, but also empower them to take quicker and smarter actions on their investments, leading to potentially better returns and avoiding costly mistakes. So like I was mentioning earlier as well, there have been times in the wealth management space, and the wealth management space has actually been tackling issues of unclaimed and forgotten investments and insurance. Hence tracking all investments with a unique identifier, which could be your mobile number, for instance, would ensure that investors do not miss or forget sundry investments which they would have made years ago, or which could be passed on to them as well. So in fact, as per ET Wealth, the unclaimed investments in the mutual funds, equities, and the insurance company space is reaching its record high to more than 82,000 crore. This number is only growing, and there could be a real gold mine of investments that investors would have accumulated over many years. Like I said, this could also have been passed on to them, or they would have invested years ago. And this, if these are forgotten or lost, would be an actual shame, especially during times that of the investor themselves or their dependents needs when they are not around. So a larger part of the unclaimed investments is mainly either because the dependents are not aware of the investments post the investor's demise. Lack of nomination is also a major issue here, because there could be investments where there is no nomination that has been updated rather, and hence the lack of nomination leads to a cumbersome and at times an endless process of retrieving those investments back in case of demise of the investor. So gathering all information from various institutions, especially where there is no nomination details uploaded, can be a major issue, and hence the monies get lost somewhere in the system. So the account aggregator ecosystem thus also provides an excellent platform for the implementation of the Unified Nomination Register, which is also known as the UNR. A UNR is a consolidated register of an investor's nomination details or nominees' details across all investments held by an investor across various asset classes. So the wealth management and personal finance platforms can make good use of this ecosystem and ensure that their users, the investors that have been investing with them, their nominations are in place and attend to investments that aren't nominated. So they would also have a one-glance view of the investments where there is nomination missing, and they can obviously go back to their to the investors and get the nomination added. So everything can be available under one roof, wherein this would be extremely beneficial for the investor as well. So this will lead with massive benefits for the entire investment ecosystem. With families obviously not having to run in case of emergency or in case of demise of the investor, the families would not need to run from pillar to post for claiming their rightful investments in times of need and grief. So basically, to conclude, the account aggregator in the wealth management space can not only help the for fresh investments, wherein the information can be all seen under one roof, and obviously for form filling there wouldn't be a requirement for form filling, completely digital, and we can have information under one roof filled in and passed on, and even for the client per se, because he will be able to see everything under one roof. He would know exactly, he or she would know exactly where they have invested in, and what is their portfolio value across various institutions. Because right now, if the institutions are working in silos, it is only the investments that investor would have under that distributor he would be able to see it. Like I said, there is NSDL cash statements wherein the investor can get overall holding view of their investments. But then this again could have its limitations. There could be some missing data, or there could be many other avenues that can be added to this. Again, from a holistic view, in order for the client, for the investor to be able to see their entire investments, the details about maybe their fixed deposits, their savings bank accounts across their insurance across various insurance houses, and a holistic view rather, they would be able to get it through the account aggregator. Because once the client has consent, and once the financial institutions that the client is dealing with has their consent, then the client would be able to see everything, regardless of which provider he is with. And obviously from a mutual fund perspective, or from a portfolio management perspective also, this can be helpful, because right now, like even in portfolio management services or alternate products, there could be stocks which are held in the name of the customer, but he doesn't actually know as to under which heading would they be. So if the stocks are held with a portfolio management service, the customer, the investor would not actually know as to which capacity does he hold that in. Maybe with the account aggregator, this could be eased out. And I'm just thinking out aloud. I mean, this could be a case wherein the investor can have their details coming in, and any provider would be able to give this to them in a single glance. So this obviously eases out a lot of issues for the consumer as well. Again, like I mentioned, if the customer, from a wealth management perspective also, any wealth manager or any financial institution who is helping the investor out with its with a portfolio allocation, the account aggregator would be very helpful, because the fund manager, the advisor, or the financial institution which is helping the investor out would have complete information as to where all is the investor invested in. This is one information which is not available currently. There are, like, obviously, because there are times when the investor would also not know exactly where some money is invested in or parked in, or there could be instances where at the flow of the conversation, the investor might forget about some investment that is currently running. And from a holistic view, because there is obviously risk profiling of investors, so if there is a certain risk profile, then the investor can follow the same risk profile across all the financial institutions that he has accounts with, or he is dealing with, or is invested with. So those the same risk profile can be maintained. Every financial the wealth management firm or the company which is helping the investor out will be able to see exactly what is the risk profile of the investor across all banks, across all institutions, and the advisory going from there on would obviously be in line with the exact portfolio allocation of the investor, the liquidity needs of the investor, and also as per the risk profile of the investor. So this entire account aggregator space in this aggregator system in the wealth management space can actually ease a lot of things for the clients as well as the wealth managers. And there's a huge scope in this. This is a very open, large space wherein account aggregator can actually step in and make this this is already a regulated industry, but it could maybe ease operations in this industry further. So there's huge scope in this. There could be many avenues which can be explored with the account aggregator, and the space can actually be made, it could be made very useful for both the clients as well as the wealth manager in the wealth management space. So that would conclude our topic for today. Thank you for joining in, and I wish everybody who is participating in the hackathon a very best of luck. We would have obviously more topics coming up, but all the best to all of you to explore more on the account aggregator space. Thank you everyone.